Hi, good morning, everyone. Welcome to our One Good Trade live show. I think some of you have already joined us. Thanks for being early, guys. If you guys can see and hear me as well, just type a GM for good morning. Let me know if we are live. This is working. You can see my screen as well. Today, I have a very special guest. I think maybe a lot of you have met her before, Jamie, who is right over here. But before we get started, guys, let me know if you can see and hear me. Type a GM for good morning. Let me just acknowledge all of you for being early today, all right, in the One Good Trade live show, all right? So today is a little bit different, guys. If you have been following me since last year, we've been doing what we call Friday weekly AMAS, Ask Me Any Stock Show, right? But today is not Friday, right? Today is Thursday, right? So this show is a bit different, right? This show is where it's not the Ask Me Any Stock kind of show, but it's more like a One Good Trade live show. All right. And what is this show about? Well, essentially, in this live show, that's where I have a very special guest, Jamie from Macquarie, who will be coming on later, all right, to share with you guys a little bit more on how you can actually potentially magnify your return on that top Singapore stock that I will be sharing as well, right? So I hope you guys can get value out of it, all right? So thank you so much for joining us. Hi, Sifang as well. Hi, Brandon, Blue as well. Would it be okay if you help us to like and share? Good morning as well. Mario as well, Adeline, Jimmy. Morning. Welcome to this live show happening right now. All right. So would it be okay, guys, if you help us to like and share? Help us like and share. There should be a like and share button maybe somewhere at the top, or maybe if you have not yet subscribed to the channel as well, make sure you do that so that when we go live in the future on every Friday, you can be alerted as well. All right. Okay. So very good. Thank you so much for joining us again in the One Good Trade live show. So what will I be covering today? Well, essentially, guys, I'll be sharing with you guys maybe a quick recap of the previous stock that we've covered in the previous One Good Trade live show. So every month we try to go live once, right, with Jamie, just to add more value to you guys in terms of bringing more awareness as well on warrants, right, structured warrants. Okay, so that's what we'll do. I'll share with you guys maybe a quick recap of what has happened previously. I'll pass on the mic to Jamie in a bit, but I'll talk about the previous stock, right? What has happened? Could a warrant trade actually been taken? All right, and that's where we'll dive into the new stock, all right, that I'd like to share with you guys. And of course, Jamie will come on as well to talk about warrants as to how you can potentially take a warrants trade, all right, on that particular Singapore stock, right? So this show is sponsored by Macquarie Warrants, all right. And before I pass on the mic to Jamie, just a quick disclaimer. I mean, as usual, right, whatever that's being shared in today's live show is just for education purposes only, right? So please do your own due diligence, right? We're not asking you to buy or sell anything. I'm just sharing with you guys my framework, the One Good Trend, to the indicator that we're using, all right? And you decide on your own actions, all right? So I hope, we will be able to add value to you guys as well, right? So maybe let me pass on the mic to Jamie, right? Thanks, Jamie, for joining us today, right? Maybe Jamie can just share a little bit on just a quick introduction today.
Hi, good morning, everyone. Good morning, followers of Joey. My name is Jamie. I'm the head of Macquarie Warrants in Singapore. And very pleased again to be doing this with you guys, to be seeing you and to be hearing about Joey's top one good trade idea in the short term. Now, we try to do this show every month, but the last time we did this on the 28th of May, we had a break in June. As a result of the June holidays, where maybe some of you were also away on holidays. I know Joey certainly is. It's the time of the year that he spends time with, his family. So hope everyone has been well since the show. As Joey said, we try to do a recap. And then we try to ask for the next one good trade. And what's been really special about this show is we're one of those shows that do a recap, right? To really revisit whether or not Joey's view, was realized, and hopefully make good gains for those of you who followed. But in the case of last May, where we talked about City Dev, I think one of those entry levels we talked about was at 870. Which if CDF were to go past the resistance level, we could then look to enter and ride on it towards $9. Now that was example also I showed you on the show of how you could then use warrants to enter. However, CDF, for those of you who were following and watching the stock, It went to a high of 863, I think mid of June, and never went beyond that. And obviously now it's trading well below the $8 level, which means again, if you had followed the show, you've seen gone through our, followed us through our examples that we went through. It means it was like a no entry kind of move, right? Meaning you don't do anything. And the reason for that is really because with structured warrants, it's not a buy and hold kind of product. It's not a buy and forget kind of a product. It's really meant for short-term trading of, upward bursts, or, in the case of put warrants, they can be used to hedge the downside moves. So, in that case, it was like, I guess, a no-go. But that's okay. It meant, also that if you didn't enter in the warrants and simply bought and held, you would not have been faced with a magnified loss situation. Why? Because in this case, the entry level didn't get hit. But if you had entered anyway, as the stock came off, your losses will also have been magnified. So hopefully none of you, bought the CityDev warrant and, was hurt by losses incurred there. But I guess my question back to Joey is, so what happens now, right? So CityDev didn't hit your entry level. I assume that was, again, a no entry, because that's what we cover on the show. Is CityDev now looking at any point like a good entry level? Does it have a good entry level, or do we forget about this share for now?
Okay, very good. Thanks, Jamie, for just sharing a little bit on City Development. I mean, that was the stock we actually covered in the previous One Good Trade live show somewhere in end of May, all right? But, I mean, good that you mentioned it. Why not let's just do a quick recap as to what is happening right now for City Development. So this is City Development, guys. CityDev, the code is CO9. It has been, I would say, a little bit weaker, right? I mean, when we talk about it in like May and April, we were actually consolidating, all right? I talk about this very key resistance level, 865, maybe all the way to like 870. Right over here, you can see that we actually touched a couple of times, right? One time, two time, three time. And when I kind of like, talk about this stock previously as well in the previous One Good Trade live show, I mentioned that if we were to kind of like break this very key resistance level, all right, around the 865 to 870, that is where potentially we could see a much stronger reversal all the way back to the $9.80, $10 kind of like, target, right? That could be the next upside target if we were to break above that resistance level. So that's where, I kind of like shared it, because, it was looking a little bit more bullish. We're approaching that resistance level. I mean, if I could turn on, all right, the One Good Trend Pro indicator that I have, just to get a better idea, like in terms of like the bullish and bearish signals, turn it on. You can see that when we were right over here, we got two 1GT bullish signals. So, so when we get a bullish signal, I mean, look at this, right? Previously, when we had bullish signals popping out, right, in last year, April, June, July, or September, there we go, right? Look at this, right? We had just bullish signals just popping out, coming out, and the rally actually started, and we got other confirmations as well, right? So when we actually had this bullish signals popping out in like May, well, I thought that could be a potential reversal, right? If that resistance gave way, right? But unfortunately, we were still kept below that resistance, all right? And sellers came back again. We did not get the confirmation that we needed. So one thing I want to clarify about the One Good Trend strategy is that doesn't mean, we get a green, bullish signal means we just get in and anyhow buy, right? No, right? I mean, that's just one pretty good confirmation, but if we get a bullish signal plus, we get other things like, a volume, candlestick, the short-term trend turning up, we break a key resistance level as well. All that would be additional, confirmations. Like, look at this right over here, right? I think previously we were trading below that 730 resistance right over here. All right, we got a bullish signal. We broke above it. There we go, right? So we wanted confirmation, right? So it's not just a bullish signal and just rush in. No, right? We have a 7-step checklist to guide us on when to get in and also like when to get out as well, right? So for CityDev, unfortunately, right, it did not break that, 865 to 870 resistance. There was no other confirmation that we seek, and we have retraced back down. Two bearish signals kind of like popped up over the past like 1 month, right? And a little bit weaker, I would say, right? A little bit weaker, right? You can see the short-term trend, the green line, also turning back down since like mid of June. Right now, still slightly pointing down. So I would say that for CityDev, not entirely out of the woods, right? We're still a bit weaker. Trend is a bit down for now in the short term. All right, maybe a bit of support coming out around 760. All right, 760. That seems to be holding quite well over the past like 2-3 weeks, right? I mean, if you want to get in near that, have a plan, but we try not to enter, because the trend is still pretty much down. We want to get a bit more confirmation to right, the reversal back up. All right, so that would be for City there very quickly. That the stock that we covered in the previous One Good Trade live show. All right. Okay. Now, Jimmy, should we move on to like the new, stock for today?
Yes, so Joey, so see them no go. So tell us, what is this month's one good trade that we can look out for?
Okay, very good. So I want to share with you this stock. I would say it's not really a stock. In fact, that it would be what we call the market, the STI Index. Because STI has been doing really well, led by the three Singapore banks, which pretty much accounts for half of the entire STI Index weightage, right? But I want to talk about the STI Index very quickly first, all right, before we then dive into this ETF, right? The Amova STI ETF that pretty much tracks the STI Index. And then maybe, Jamie, you can come on later, right, to share on how one can actually take what we call a view on the STI, but not just buying the ETF directly, but actually how one can actually do warrants, right, by magnifying our return on the STI. All right, so okay, let's talk about the STI Index right now. So you can see that this is the STI, the Straits Times Index, right over here, 5,562. So this is the normal STI Index, guys. I mean, pretty much it tracks the top 30 stocks in the Singapore market, all right? And I've already turned on my 1GT Pro indicator in terms of the bullish and bearish signal. So we have been in a very strong, I would say, longer term uptrend since like last year. I mean, look at the 100 days moving average, the red line and the blue line, right, both pointing up. So longer term trend has been up since last year. Very strong, consistent, stable uptrend, I would say. All right. Of course, in the short term, we look at what we call the green 20 days moving average line, right? It is pointing up, the short term trend is up. That's where we can potentially ride even more upside, right? But since somewhere in March, where the US-Iran war starting, you see the short term trend turn down, up a bit, flat a bit, nothing much, right? From March all the way to May. However, in June, that is where we actually got a 1GT bullish signal, all right? Not just that by itself, but as I say, right, we want to get confirmation. And the short-term trend also finally turned up, and it is still up. So a lot of people are asking me, hey, Joey, wow, the STI is at all-time high, the banks are at all-time high, is it too late to get in, right? Is it too late to get in? Should we get out everything, and wait for it to come back all the way down and then we get in again, right? Well, my take is this. I mean, I've been talking about it since last year. In fact, last year it was also at a record high, in case you didn't know, right? I mean, last year when we were at 4,005, 4,006, people also say it's record high. The banks also, people say very expensive. Does it make sense, right? But you can see that it has been even stronger, right? It has been even stronger, all right? So one thing about the one good trend strategy is that we don't get in and get out just based on whether is it cheap or is it expensive. I mean, it's very subjective, right? So we get in based on strength. Right, so you might think it's expensive, but it was expensive last year as well, right? So we get in when there's momentum, when there are confirmations saying that it still looks good, you can ride even further, right? Of course, you can get out as well when there are signs of weakness, all right? So in terms of the STI right now, I would say that it has been even stronger than the US market, all right? I would say over the past 1 over year, S&P is capped below a very key resistance, but STI has broken that, 5,000 to 5,002, pushing even higher. Now it's like 5,000, nearing to 5,600 already, right? So there could still be more legs to the rally, right? There could still be more legs to the rally. In fact, right now, I would say for STI, right, over the past 1 over week, seems like 5,500 is already a new support level, right? It used to be 5,000, guys, look at this, right? It was like 5,000 to 5,001. Support became higher, all right? We broke it, became to 5,004, and now it is to 5,500. So I think the range right now for the STI would be like 5,005 to 5,006. It's like a 100 points kind of range, right? So short-term trend is up. Bullish signal that popped up in June that led the reversal still playing out. There's obviously no red color. Bearish signal, all right? And if I can quickly turn on the trailing support level right over here, right, that tracks the STI, that pretty much follows the STI as it moves up. You can see, right, this trailing support line has been popping up since June. It followed the STI since, I would say 17th of June, right, when we got the first 1GT bullish signal, right? So you give it the space to breathe. It follow up, follow. We are still above the trailing support, so it still looks good. That would be another confirmation, I would say, in terms of the STI or the Singapore market still looking pretty strong, right? Okay, so that's the STI index, right? So now you must be, Joey, I mean, you've been talking about the STI index, which pretty much is the entire Singapore market, but how do you actually take a position in the STI? So for example, we have some clients and some of our mentees who say that, oh, they don't want to stop it. They don't want to choose whether DBS or Sheng Siong or some, random Singapore stock. They want to just buy the entire market, right? How do they do that? Well, you can actually do that by buying what we call the STI ETF, right? And that's where, there's this, there are two types of ETF that tracks the STI, right? The State Street SPDR ETF, that's one right over here, that the code is ES3, okay? And the other one would be what we call the Amova STI ETF, which is what I'll be talking about today, right? So there are two types of ETFs. So I think both are the same. Of course, State Street is the one that is much longer. The fund size is about more than 3.6 over billion dollar in terms of the fund size. The Amova STI ETF is about 1.3 billion dollars in terms of fund size, right? But right over here, you can see that this is the Amova STI ETF that tracks the STI Index, right over here. Like, it looks pretty much the same, right? It's because it tracks the STI Index. So STI go up, it goes up, right? Now, I want to talk about the Amova STI ETF first, all right? And then later Jamie can share with you. There's actually warrants, all right? Structured warrants for the Amova STI ETF, all right? And that is where you could actually think about how you could not just buy the ETF directly, but actually potentially multiply or get a better, higher ROI on this ETF, right? So let me just talk very quickly about the Amova STI ETF. The code is G3B, right? G3B. You can see that, same thing, we got a 1GT bullish signal right over here, 13th of May, all right? There we go, push all the way up. How many percent would that be from now to here? About a 12.5%, all right? If you have got in on the warrants for Amova STI ETF, it will not be 12.5%. It will be much more, right? So later Jamie will share more on that. But I would say right now for Amova STI ETF that pretty much tracks the STI index, we are seeing some pretty good support coming out around the $5.60 level. So 560 to 570, it seems like the market is taking a little bit of a breather, resting for a while, consolidating, and I think that's healthy. All right, I think that's a sustainable uptrend. That could be an opportunity to get in on dips as well, especially as we near certain support level like the 560 or maybe even that 550. Right, so it used to be 550, but right now it seems like 560 over the past week. Buyers have started to come up already. Right, so this is the Amova STI ETF that tracks the STI index. The code is G3B. Okay, now let me go to pass on the mic to Jamie, right, to share more about how one could actually take a position on the STI index or maybe even this ETF by using what we call warrants. I know there's some questions as well on warrants, guys. So there will be a Q&A at the end, so not to worry. All right, we have Jamie, who's an expert in warrants right over here. Any questions, they'll be more than happy to help you guys out as well. All right, but let me pass on the mic to Jamie to talk a little bit on Amova STI ETF warrants. All right, Jamie, back to you.
Thanks, Joey. Speaking of questions, I already see Jess, you've asked one question on whether warrants equals to options. Well, wait for a bit. At the end of the show, I will address that. Okay, Jess?
Nice.
So Joey, you asked a really interesting question. You said, if based on your one good trend buy signal sometime in May on the ETF where it was around $5.10, and currently where it is around $5.70.
Yep.
How much more would you have made via the warrant? Now, first of all, I think I just want to quickly just maybe address a question that some of you might have on your mind. Why do we not simply have STI call warrant? Why are we having call warrant track the Amova STI ETF instead? Well, I think there's a very simple answer to this is because, generally, the STI futures, which, ideally our STI warrants we have tracked, it's not as liquid and the spreads are not as tight compared to Amova STI ETF, which is a very, one of the most popular ETFs on the Singapore market. And so a lot of you probably already know about it. and which is why we've made the decision to have a call warrant that tracks Amova STI ETF rather than STI futures directly. Now, we are one of the issuers of a product that we pride to be very transparent. How so? With what we call the live matrix. Now, if you have a look at the screen, what my live matrix does is it shows you live where the warrant prices are alongside where the underlying prices are. So ideally, we would then be tracking an underlying that's on tight spreads, generally trades on tight spreads, so that the warrant will also be traded and quoted on tight spreads. So, I mean, I guess with this kind of background, hopefully you can understand why, we have a Amova STI call warrant, which launched only last week alongside other ETF underlines, including gold, including S-REITs, but that's and underlying, hopefully that Joey can cover another day, especially if the short-term move looks good and like it's going to explode upwards or potentially pull back. So back to Amova STI, how would it have performed if you had entered back in May, where that was the one good trend, where it was around $5.10, right? For that, because the warrant was only listed last week, we don't have the historical performance data, which is found in this tab. But instead, what we can do is to use our warrant selector tool, which I find one of the easiest to use tools. In this case, why is it easy? Because you simply only need to select the underlying, in this case, Amova STI ETF. Choose whether you're bullish or bearish. In this case, if you're bullish, when the Amova STI was around $5.10, right? This was back in May, where the one good trend, indicator showed up on
about
the
510. Yep.
Yeah, 510, and then of course, if we were targeting about 560, now that would have been a very decent 10%, right? 10% gain that you would have made. Of course, then Joey was also alluding to about 570, which is about 12%. But let's say we weren't greedy, we're just aiming for $5.60. How would the warrant have done? Of course, this is not historical, but if let's say Amova STI ETF were to come back down to $5.10 because the STI has come back down, what kind of returns could you anticipate? Now I'll just quickly use this tool and I'll show you. Simply put in your target exit price, your target entry price on the last, and increase the number of weeks to simulate the returns. Now, what you see is that in a week's time, the Amova STI warrant, in this case, there's only one call warrant here, OUKW, the unique 4-digit code that you type in your brokerage trading platform to execute this warrant and transact in this warrant, okay? OUKW, it would have, in 4 weeks, it would have gone up by 165%. But noting that we're really trying to work backwards, right? Like May to now is around a 2-month period. So that would have been around 8 weeks. And what you're going to see is that the returns are much lower. Why? Because there is the effect of what we call the warrant holding cost setting in, known as time decay, where over time, if the underlying doesn't change, the warrant price will be lower, right? It's just the price, literally the price we have to pay for a longer holding period. Now, this is not unique to just warrants. It's a feature that is prevalent and existent in a lot of leverage instruments, whether you've got the likes of your CFDs or there's an unlisted product, but a listed product that's on the SGX, they are all going to erode in value, or there is increasing costs rather the longer you hold onto it, which is why I've said from the beginning, warrants are not buy and hold products. They're not buy and forget products, right? You have to have like a time frame, you have a price target in mind in order to use it so that it can magnify the moves for you. So you would have made a very decent 10% gain, but if over the last 2 months you had used an instrument like a call warrant tracking the Amova STI ETF, you would have made close to 9 times of the return. You have made about 88.5%. If you held on to it to about 570, which Joey was saying is around 12.5%, right? Return to the top, the recent high, you would have made about 10 times more, well, a bit more than 10 times, 11 times more and a bit more, 134%, right? You would have made that kind of gain. And really, this is, I guess, why warrants can be very popular in the Singapore market, for investors to express whether they are bullish views or where they are worried about short-term pullbacks, right? To protect any bearish moves, right? But in this case, if you had a positive view and you, instead of going straight in for STI, where, STI ETF, which is good if you wanted to hold on for longer, you wanted to hold all the way to, potentially it goes to $6, $7, whatever. That's great. Buy the ETF directly. But if you were just looking for, to capture a short-term move, to the next resistance level, then hopefully a call warrant can magnify your returns, at the smaller capital outlay required. How small in this case? If the Amova STI ETF was at 510, then you needed only to enter at 2.6 cents, right? Which requires a smaller capital compared to trading the Amova STI ETF directly. But of course, I think back to where we are now, where the STI is already higher. So for those who have missed out on the move over the last 2 months, I guess the question is what now, right? Maybe you could be a bit concerned about a long-term, or longer-term holding period. You are probably a bit cautious, right? Because it's gone up quite a bit already, especially I think this month. And you are a bit worried that it could not go higher and beyond, say $6 target price, right? In that case, what can you do? You can also consider this Amova STI call warrant, because you're really looking for a shorter holding period of maybe days, weeks, months. In this case, we want to know how much the warrant will move, right? Just now I'll show you an example of 510 versus 570. Now, what about if you entered around here, which is 568, and let's say you were targeting to just maybe a $6 target price. Now, not much higher from here because it's only 5.6% higher from the current entry price. I think we're right around the corner of entering into the earnings season as well. Singapore banks are earning, I think, Joey, sometime in the first week of August. So if we think that could also, along with Joey's analysis on how the chart continues to look bullish in the short term, how we can capture this is we can potentially enter into this Amova STI call warrant OUKW at 8.3 cents today. And again, use this tool, the warrant selector tool, to simulate how the warrant will perform, what the warrant price will be based on our target, right? So, if this move of 5.6% is going to happen in a week's time, again, you're going to see it's going to move by about 10 times more. It's going to go up from 8.3 cents to 13.1 cents. But as hopefully you already know by now, warrants, just like options shares, you asked about the difference between warrants and options. Warrants are a form of option. So they have what we call the time decay, which is also prevalent in the options product, okay, whereby the warrant value will drop with time, right? And in this case, if you held onto it for 8 weeks, you'll see that the return will now almost half from, if the STI ETF were to move up 5.6% in a week, okay, in this case, it will only go up by 29%. Ultimately, what we're trying to work out via this tool, apart from trying to project returns of how much returns we can make if our view was right, the other thing we're trying to solve for when we use this tool is because warrants are not buy and hold products. So the question is, exactly how long should you be holding onto the warrant for, right? And in this case, we are trying to work backwards based on your target exit level. Okay, all we need to know is simply increase the number of weeks to the point where you keep seeing the returns drop, right? Because of time decay. Drop to the point where it no longer offers much more gearing, okay, meaning its ability to magnify. It's not offering much more magnification compared to if you had bought underlying itself. Now, in this case, as I increase it to 13 weeks, can you see the warrant is only going to go up by 3.6%? Okay, compared to if you had bought the Amova STI ETF, which is up 5.6%. So in this case, it would in fact have underperformed the underlying, which means the maximum holding period for this warrant, if you wanted to use it to trade Amova STI ETF, is really only 12 weeks. Okay, so if you enter today, okay, whichever time you're using the tool, right, and you were looking at the entry price here, whatever time you're looking to enter, you just need to use this tool to help you work out the exact number of weeks, right, the holding period you should have using this product. Rather than just buy and hold, you need to know when and where you can get out of. Of course, if the STI ETF were to go up by 5.6%, in about a week's time or in 4 weeks' time, please feel free to get out with your magnified returns of 58% or 46%, right? So the quicker the underlying takes to move in your favor, the more geared returns you enjoy via the warrant. But we're talking about, the worst case scenario. What if it doesn't go up to your target exit level, within a short period of time? Then we want to know when we have to cut out of this warrant, when we have to, trigger a sell, or cut loss, or, even profit taking, if you didn't get out earlier now and you were just holding to hope for the STI ETF to go out even higher. Now you then need to know that by the 12th week mark from the day you buy the warrant, okay, at this current price level, you have to get out of the warrant. Why? Because if you continue to hold on to it beyond 13 weeks, you'll find that by the 14th week, you will be sitting on a loss instead, right? So you don't want to get into that situation. You need to manage your holding period on warrants, any warrant that you buy, by using tools such as the warrant selector tool to help solve and work out and tell you what your maximum holding period is. So this is the Amova STI ETF call warrant and how it's going to perform in the short term. Again, if the target price of $6 and Joey's bullish views on STI was correct in the short term, then you're going to potentially make a good return of close to 6%. But if you wanted to amp it up because you missed out on the 12% move from May and you wanted to try to magnify it so that you can catch up on gains that you potentially lost out on, then you can use a call warrant in this case to amplify and amp up your returns on your portfolio in the short term. Right, which is again going back to why we do this show with Joey once a month, because we're not interested in what is looking good, a buy and hold idea for the long term. We're interested in knowing what is a trading idea in the short term. And at the end of the day, this is what tools, financial tools such as a warrant, what is best for is really best for swing trading, short term position taking. And how short term it is, it depends on what your target price is. It depends on which warrant you choose. And in this case, specific to the STI ETF, OUKW, you can only afford to hold on to it for 12 weeks. If your view was that the STI ETF was to move up about 6% higher from the current entry level. Okay, so that is the idea, the one good trade idea that Joey talked about. And hopefully, via this demonstration of the warrant selector tool, you now know how a call warrant over the STI ETF could perform if the bullish view were to be realized. But because we skipped June, right? We didn't have a one good trade in June. So I guess my question back to Joey is, could you then give us a bonus share? Since we've talked about index, how about a bonus Singapore share that is looking pretty good at this point? Just so that the people who have dialed in today, the 99 audience investors that we have on the call, could just have a bonus, stock idea as well.
Ken, thank you so much, Jamie. All right, thanks, for covering this Amova STI ETF warrant. All right, so I think, Jamie mentioned a very, very good point. I mean, in terms of how you can potentially magnify your returns. I think most people, when they look at the STI, right, and then, they know that there's a STI ETF, right? So, if you want to take a view on the entire market, you just buy the entire STI ETF. But most people don't actually know that, there is warrant for the STI ETF, right? And that's where, you could actually...
And that's okay, Joey, because it only listed last week. So they wouldn't have known about warrant.
Correct. But now that, is available, right? I think everybody really should know about that, especially those who want to, really magnify returns trading the STI Index. Right.
Joey, I think we've got Peter who asked a very relevant question on Amova, which is, wasn't it previously the Nicole AM Singapore STI? And yes, if some of you are a bit confused, Amova is the renamed,
the new name,
rebranded, I guess, Nicole AM brand. So it is the same. It just got renamed. Yeah, but if you look at the past charts, it would have been the same chart. Yeah.
Okay, good. I think we have quite a bit of questions. So not to worry, guys. If you have any questions on warrants, type in the chat later. We have a Q&A, quick one. All right, and that's why we can try to go through the questions. Right now, let me just go ahead. Just to share with you guys, maybe just one bonus, Singapore stock, which you might want to put in your watch list. I think there could be potentially a bit more upside. Of course, Jamie will come in later as well to talk about warrants on this Singapore stock. Now, what would that stock actually be? Let me just go to pull out my watch list. Actually, a few of them have came to my watch list over the past few weeks. But Maybe I can share with you guys this new stock that just popped out, and that would be Yangzijiang, all right, YZJ Shipbuilding, right over here, trading at about $3.92. All right, so this is Yangzijiang, YZJ Shipbuilding. Let me just go and pull up the banner, right, so it's a bit clearer. The code is BS6. So this stock has been in my watch list, I would say, since like last year. But I would say somewhere in like March and April, May, it was a bit boring, right? It was like just consolidating from this resistance from 440 all the way to somewhere around that $3.40. We're just going up and down, right? And we actually saw a bit of resistance popping up somewhere around that $3.80. Look at this, right? So 380 was like, when we sold down in May, we were below 380. You can see went all the way down, rebounded, retested, came back down, up again. Something like what we call a double bottom pattern, right? Whereby if we were to break that resistance at about 380, all right, it could lead to what we call a potential reversal back up, right? In terms of the upside, a potential reversal, anything above 380. So this 380 will turn into what we call a new support level, right? So from 380 all the way potentially up to that $4.40, maybe to $4.50. That could be what we call the upside targets, right? And in terms of the potential upside gain, that will be about 15%, right? So that's what I've done in terms of the manual analysis for Yangzijiang Shipbuilding, right? We have broken above that $3.80 resistance level that we have been trading below for almost 2 months. But if I can quickly turn on, as to why was I even, alerted to this stock, right? Over the past few days, well, we can see that, let me turn on the 1GT Pro indicator in terms of the bullish and bearish signal. So we can do this for any single stock, any asset classes, DBS, the STI, all right, the US market, doesn't matter, right? But any stock, we can turn it on and we get bullish and bearish signals in seconds. So if you ask me, right, for Yangzijiang, somewhere in May and June, not so good, right? Not so good. Why? Because we got two red color bearish signal, right? So you can see the short-term trend, the green line also turned down. If you buy, you might get stuck. So we try not to get in rush to buy, we let it stabilize, right? Now, over the past 2 days, you can see that finally, after consolidating below that 380, well, in fact, yesterday, we actually got a brand new 1GT bullish signal. Now, if you look at the past, I would say maybe in February, look at this right over here, February, right? Same thing, right? In February, okay, we got not one, but we got two, right? We got two bullish signal. What happened? All the way up to that 440 resistance level, all right? And then we started to see a bit of a pullback. We got a bearish candle near the 440 resistance level. But we got two bullish signals that led the reversal, right? So yes, came back to my watch list again because now, even though it's one, all right? I mean, previously got two, but now it's one. But at least there are some signs of strength coming back because the short-term trend, the green line, right? It was like down, flat, boring. But over the past few days, you can see the short-term trend, the green 20 days moving average line, has started to turn up as another confirmation, right? So remember, when we get a bullish signal, it doesn't mean we just go and buy, right? But if we get a bullish signal, the candlestick looks good, the short-term trend showing signs of strength as well, reversing back up, we break a key resistance level as well. All that will be confirmations that this reversal is starting to happen, starting to look a bit more bullish. Does it make sense, right, Ken? So that is for Yangzijiang Shipbuilding, BS6. I think anything above 380, I'm not too sure whether you're deep. In fact, it seems like, not even 380. It seems like today, like it went to like near 390, then, some buying pressure have came out already, all right? But I think anything above 380 to 390, that's potentially where the uptrend, the reversal looks good. If $4 psychological resistance gives way, I think there could be more upside momentum even faster. All right, so that is pretty much the bonus Singapore stock I've shared with you guys. Yangzijiang Shipbuilding BS6. Let me go ahead to pass on the mic to Jamie, right, to share how you can actually take a position, not just on the underlying stock directly, but how warrants can actually come in, all right, to magnify your returns on this underlying stock. All right, Jamie, back to you.
Thanks, Joey. I'm so glad we got a bonus share. Now, very interesting that you've covered Yangzijiang. I guess it started to move right as your signal comes out. And if you look at our website, we have a top warrant gainers section for under warrant stats, and we have it over various periods. And in fact, over the last 2 weeks, Yang Zhejiang call warrants, we only have 2 of them. It's actually dominated the top gainers table here from the 8th of July to as of yesterday. Of course, it's not taking into account today's move because that's under today's tab, but it's unchanged anyway today. But Yang Zhejiang has moved an incredible 15% over the last 2 weeks already, from the support level that Joey was talking about. And you can see in the case of Yang Zhejiang call warrants issued by us, it's moved between about 7 times more to achieve a gain of 100%. So over only 2 weeks, if you had used the call warrant instead, you had made 100%. For this warrant ZLBW, but if you had used lower risk warrant with a lower gearing level, V3DW, you would have still made a pretty good of about close to 4 times return of 57% via the call warrant. And again, this is hopefully helping to illustrate why maybe sometimes in certain situations, in certain convicted ideas that you have, where you're keen to use less capital, you might then want to consider using a call warrant or a put warrant instead because of its ability to magnify the gains in a short period of time. Now, I guess the question is, now that it's showed up, in Joey's one good trade for this short-term period, how can we then use a Yang Zhejiang call warrant in order to capture potential upside from here to about maybe the last time it was resisted at about 440. And again, to quickly know how the warrants can perform, by now you already would be familiar, hopefully, with this tool called a selector tool, because it's the quickest way to help us, simulate returns, of the warrants, especially if there was more than one warrant. It can then help us to maybe make a decision between the 2 warrants. Now, the 2 warrants here that's tracking Yang Zhejiang shares, one is V3DW, the next one is ZLBW. You will notice that one has got a fire logo or next to its code. The other one doesn't have. The reason for that is because this is what we call the hot warrant. And it's hot because it's got the tightest spreads and the highest liquidity. And in this case, the expiry is a bit more forgiving. It's at the end of this year, whereas ZLBW, it expires in 2 months' time, which might also mean 2 things. It will cost less, right? Because there is less time value left to expiry. But it also means that potentially it can be higher risk, which is why if you put in your target exit level, right? This is your profit taking level of 440, and you increase the number of weeks. You see that in the short term, in the near term, of whether it's a 1 week or 2 week period, this second warrant here, which is going to expire sooner, cost less right now, is going to make you much bigger returns compared to this hot warrant of V3DW, right? In a week's time, it's going to make you 80%. In 2 weeks' time, it's going to make you 70%. Why? Because simply it's a higher risk warrant with a higher, what we call effective gearing level. Now, all structured warrants, each individual warrants has got their own effective gearing level. In this case, this warrant here is only moving by about maybe 3.5 times more. Why? Because if you click into it, like I said, all warrants have got their own effective gearing level to tell you and give you an estimation of how much the warrant will move for a 1% move in the shares. Now, if you click on warrant terms, in this case, you see the effective gearing level of around 3.5 times, meaning it's going to magnify only by around 3.5 times, right, for a 1% move in Yang Zhejiang shares. So that's why you see that the magnified returns is less than, say, this warrant ZLBW, where, again, I quickly click into it, into warrant terms section, you see it's got a much higher gearing of about 7 times, right? So, okay, we want to, again, just do the same exercise, increase the number of weeks so that we can work out the next important consideration when you trade a warrant, which is your holding period, right? Your maximum holding period. You can see as time goes by, both the returns will fall, but by the 4th week, you will see that this more higher risk warrant with a higher effective gearing level, ZLBW, in fact has got its returns lower than V3DW. That's because 4 weeks from now, we are into the end of August. It's nearing the expiry even more, and the time decay has set in to be very sharp, right? Which is why, we've flagged this as the hot warrant instead, because it's more forgiving. Like I said, you can hold on to it for longer, and you'll find that even though in a very short term, the effective gearing and the geared returns are going to be more inferior compared to ZLBW. But if you wanted to hold for longer, the returns are better. In this case, in 5 weeks' time, it's still returning about 29% compared to this ZLBW warrant. Okay, so I guess this, for those who are very, very bullish in the short term and you think Yang Zijiang is going to move another 12% in 2 weeks, after all, it's moved 14% in 2 weeks, right? You can still go for this warrant, but for the rest of you who are very new to warrants and you want to have a longer holding period, right? Then in this case, you can look at V3DW. We want to know what the maximum holding period is for the first warrant. In this case, the maximum holding period for the second warrant here is 5 weeks from today. Why? Because by the 6th week, it would return you a negative return, right? But the first warrant here, more forgiving, you can continue to hold on to it for longer. So you keep increasing it. And again, the same thing, you see that by the 10th week, the return you make is slightly less than if you had bought Yang Zijiang shares instead. So I would say the maximum holding period is either between 9 to 10 weeks. By the 11th week, the return is less, and by the 12th week, you make no return even if your view is right? So very conservatively, you want to hold on to the first warrant no more than 10 weeks, right? But if you don't mind that by 10 weeks, it's still returning about 11.4%, you can hold on to it, but just know that by the 12th week, it's not going to make any gains at all, even if your view is right. Okay, so this is the how you can select and narrow down your selection of which warrant you pick. Let's say you do want to pick V3DW and you know by now you cannot hold longer than 11 weeks. 11 weeks from now is still very hard to work out, right? In my head, I don't know what the date is 11 weeks from now. So not to worry, we have another tool to tell you exactly what the date is that you should take note of and you should put and set an alert for. And all you have to do is to click into the warrant. Whenever you click into any warrant codes, you get taken into the live matrix immediately. Again, to repeat what the live matrix does, it shows you the live bid and offer prices alongside the live bid and offer prices of the underlying. Now, we want to work out what the date is. So the tool to use is the exposure simulator tool. Okay, to use this tool, you need to already immediately know which warrant you're interested in, right? So in this case, we're interested in V3DW because the tool, just like the live matrix, there is a live matrix for every warrant. There's also an exposure simulator for every warrant that you're looking at because they have different terms, they've got different gearing levels, etc., etc. So it's unique when you use the tool to the warrant that you are interested in. Okay, so V3DW, we're interested in the date, but maybe I think what this tool can also do and what I want to throw in is just extra knowledge you can have is how the warrant will perform compared to the underlying shares of Yang Zijiang, right? So maybe we start off with, if you were interested in, say, the Yang Zijiang shares and you're interested in buying $39,000 worth of Yang Zijiang shares, you're interested in investing that amount, right, based on its current price of about $391, okay, then you buy about 10,000 shares, right, if you wanted to invest directly into Yang Zijiang shares and ride on the potential upward trend. Okay, you can do that. But if you are now looking to explore using a Yang Zijiang call warrant or V3DW instead, then how much would you be investing in the warrant? Now, the warrants are cheaper. Like I said, they require a lower capital outlay, but how much less? In this case, this warrant will cost about 3.5 cents with Yang Zijiang trading at 391. The gearing of it is around 3.4 times, right? So you will then need to invest 3.4 times less than this $39,000, right? And this tool works it out for you. It tells you your approximate investment amount before costs is about $11,500. And how many units of that should you be then investing or typing into your brokerage account? The answer is here, around about 330,000 units, right? Sounds like a big number, right? 330,000 units, but actually, because the cost is 3.5 cents, the investment amount is only $11,500. So it's about 1/3 of the investment that is required if you trade Yang Zijiang shares directly. Now, how will it perform relative to Yang Zijiang shares? As always, 2 considerations: price target you have to enter, and then the holding period, right, when you trade a warrant. Now, in this case, if we move the number of days, it's just that like the warrant selector tool where you increase the number of weeks. In this case, we move the number of days, right? It's down to a day level. You'll find that in about 10 days, right? If you had bought Yang Zhejiang shares for like $39,000, you would have made $4,900 in absolute dollar terms, right? You have made 12.5%, $4,900, right? This is represented by the bar graph here. The change in your underlying portfolio, you have made 4,900. Now, if you had bought the Yang Zhejiang call warrant instead, then you have made absolute returns of about $4,900 as well to replicate the absolute price return that you would have made in Yang Zhejiang call warrant with less money. I repeat, you have made a similar absolute dollar return of 4,900 using about 1/3 of the investment outlay, right, compared to Yang Zhejiang shares. So you have made absolutely the same amount of absolute return. But in terms of percentage, it's going to be much higher. It's going to be magnified to about 3.5 times more at 43%, right? So, but if you were to hold beyond this 10 days, right, what's happening in the Yang Zhejiang warrant? Again, same thing, you'll notice that the absolute return will drop. Why? Because the percentage return is also dropping due to holding cost setting in. And again, we are trying to work out the maximum holding period. We talked about around 11 weeks to about 12 weeks. I think that's about three months from now, right? So if you keep dropping it, you'll see that the absolute return, the graph has really dropped, right? The absolute returns are going to be less compared to if you invest in Yang Zhejiang shares directly. But the percentage returns are still, higher. In this case, 20%, not much more gearing left. There you go. So you can see in 65 days, right? In 65 days, about a month and more, basically, the percentage return is only going to be about 14.3%, right? And if you continue to hold on to it, it now drops, right, to about, in this case, 0% if you held on to it for about, close to 3 months. Okay, so which means you really don't want to hold it for close to 3 months, right? You want to hold it closer to about a month from today. So what is the date you should be paying attention to as your maximum holding period to indicate whether or not you should be cutting loss? Even if Yang Zhejiang shares did not trade to 440, you probably should look to exit the warrant at this point, right? What is the date you should be looking at? In this case, it's about 2 months from today. 60 days from today is about around 2 months, and the date you should look at is around 23rd of September. So you can then set, like a calendar alert on this date. If you're looking to transact in this warrant to capitalize on Yang Zhejiang's upward move, right? Unfortunately, if Yang Zhejiang shares were not at 440, let's say it was only at $4, it didn't quite make it to your target exit level. You see, you'll be making a loss of about 23% instead. And you should definitely get out, because if you continue to hold on to it, even if Yang Zhejiang were to go to 440, you can see that you are making not much return by holding it for 3 months, right? But of course, if you continue to hold on to it for about 62 days, you'll still make similar returns to the shares. But if it were not at 440, you should still look to exit and cut loss, in this case for about $2,600, right? It's a geared loss. It sounds like a lot, 23%, but because you've put in less in investment amount, the absolute dollar return that you will be seeing, the loss of it, it's not that scary. In this case, it's down $2,600. A 23% loss. I know this part is not easy to digest, but I also always say, if you cut your losses and you're disciplined in using the tool to work out a maximum holding period, you cut your losses, you lose about $2,600. You can use the remaining capital to look for the next opportunity to potentially make geared returns that will amplify more than this 23% loss, hopefully, and recoup your absolute or percentage return loss, right? You can still make it back. But if you continue to hold all the way, you refuse to cut your losses, and you near almost 100% loss, in this case, you hold it all the way to the last trading day, you're going to lose almost everything you have put up front. And then you have very little capital left in order to try to recoup the via a next opportunity. It's very hard. It's much harder to recoup the loss that you have made when you cut loss. Okay, so bearing in mind, I think warrants are not like shares where even if Yang Zhejiang has only gone to $4 and you tell yourself, never mind, give it another year to go up to 440. You can do that with shares, but with warrants or even any leverage products, that is generally not advisable. because you're going to pay up so much in your holding cost that the gearing is going to be eclipsed, right? It's going to be more than offset by the time decay to return you something negative instead. Okay, so this is how warrants work. This is how the Yang Zhejiang call warrant will work. Please do not hold it, in this case, beyond about 62 days. If your view was that Yang Zhejiang shares will go up to 440 from today, if you were to enter into the warrant. Okay, so this is the V3DW. In order to transact in this warrant, with the planned investment value, and whatever number of units that you're looking to transact in, you do not do it via Macquarie Warrants. We have what we call trade warrants here button, but essentially it takes you into your respective brokerage platform. In this case, you're keen to trade with Philip, right? If you click into Philip Securities, it's going to take you to your login screen with Philip. Okay, so you do not trade them on our platform. You trade them with your brokerage under your brokerage account with your broker instead. Okay.
Yep, correct. I think, so I think that is maybe some of the misconception that people have, right? You think that it's like a separate platform, but guys, it's just the same usual trading account that you have, all right? You can just type the code, you'll be able to search for the warrant, you'll be able to buy and sell that warrant like a normal Singapore stock as well. Okay, shall we go to Q&A, Jamie? I think we have some questions.
So we promise we've got about 5 minutes left.
Yep.
Jess is saying it sounds like leverage trading. Indeed, Jess, it is leverage trading. The difference is this is not used on a margin account. It's used on your cash account or your contra account, whatever you're using to trade shares with. So I would say because it's not a margin product, your maximum loss is also capped, right? It's capped to the most tragic and absolute worst case scenario of 100%, right? Of which then 100% is limited to the smaller capital outlay required in trading the warrants compared to shares, right? So it's a form of leverage trading, certainly, which is why the risk can also be quite big if your view was wrong, right? Because leverage trading works both ways. But hopefully with the tools of Selector and Exposure Simulator, you're aware of the maximum holding period, and you should not then see 100% loss as long as you learn to cut your losses based on the maximum holding period that the tools aim to tell you to cut loss by. Okay, and then to address your previous question, Jess, what is the difference between a warrant and an option? We almost get that, Joey, at every One Good Trade live show, which is great because it means that we've got new people joining and, a very common question. Well, I would say there are 3 big differences, right? I've said before, warrants are a form of options, but the 3 big differences is whilst they all provide leveraged a magnification, right? They require smaller capital outlay. They're both leveraged instruments. But I think the 3 big differences is with warrants, there is a presence of a designated market maker like Macquarie to provide continuous bid and offer prices on both sides, which is what the live matrix tells you, right? The live matrix tells you where the prices of the warrant is quoted alongside the stock. And this is because we are there providing both the bid and offer prices as well as liquidity to ensure that you can easily enter and exit trades when you are looking to trade the warrant, even if nobody else is trading the warrant, right? You can rest assured that you can easily get in and out of. Now, not every option has got the presence of a market maker. So it means that if you were trading an option instead, you really have to wait for somebody, a willing buyer and seller, to appear before you can get that trade transacted and done. So that's the one difference. 2, with structured warrants, because they're listed on the SGX, you cannot short sell. You cannot short sell overnight. Whereas option traders, option sellers, they get to short the product, earn premium, but at the same time, this means it comes with unlimited losses for as long as you are exposed. You're shorting, right? You're selling. As long as you're exposed and that's not covered, your losses are unlimited. Whereas because you cannot short sell a warrant, your losses are therefore not unlimited, and also because it's not a margin product. I would say then, the third difference with warrant versus an option is really, the fact, going back to the fact that warrants are traded on the SGX. Options are typically traded over the counter. Of course, there are exchange-traded options as well, but not available in Singapore. So therefore, if you're looking at, options over Singapore shares, over the likes of STI, over the likes of Yang Zhejiang, you probably cannot find options over, you definitely cannot find options, listed options that tracks these underlyings. But with warrants, you can then get a leverage exposure, just like you would with options over these two names. I hope that answers your question, Jessie.
Yep. I think we have one more question.
SFR 7916 asked a very good question as well. The minimum investment amount shown in the example earlier via the exposure simulator is still 5-digit, right? Yes, it's around 12,000.
11,000.
Is there a smaller capital outlay? Indeed, there is. Now, I've just given you, if I go back to the tool, I've given you an example of investing around, just now was 391, right? Of investing around $11,000. That's because I'm saying if you were looking to invest 39,000 in Yang Zijiang shares itself, of course you could invest less, right? You could be looking at investing maybe only about $20,000. In this case, then you'll see 3.5 times less than that, $20,000 is only $5,600.
I think, Jimmy,
right?
your
So
screen
it's
is not
entirely-
showing.
Oops,
Let me just
sorry.
check.
Let me go back to this. Yeah.
Okay, got it.
Just now we talked about, Yang Zijiang is moving up as we speak, Joey. So just now I talked about how if, you will maybe invest $11,500 into this warrant only because you were looking at your exposure. If you trade in shares instead, you're looking at maybe investing $39,000 by buying 10,000 units of Yang Zijiang shares. But of course, you could be wanting to trade only 5,000 units of Yang Zijiang shares, right? Which is a $20,000 investment. But in this case, for the warrant, you would then be investing $5,700 instead. So this is no longer a 5-digit figure. If you wanted to trade less, you're only looking to buy one Yang Zijiang share of 3,900, then you would be investing only $1,100 into this warrant. Now, ultimately, the amount of capital you want to place in the warrant is entirely up to you, to your risk appetite. And I always say, actually, maybe the best way in choosing a warrant and deciding on the capital you're willing to invest in is really to look at the maximum, your risk appetite for the maximum loss you're willing to take, right? And that way you can then decide. Of course, like I said, you really shouldn't be losing 100% of this return as long as you stick to cutting your losses by using our tool to work out the maximum holding period, right? You should be losing, even 20% of this is about $200 over, right? So it's entirely up to you, but just for those who need to think backwards, right? If you never invested in warrants and you were looking at maybe investing $3,900 in the shares instead, then okay, it will require you, in this case, only $1,100. So going back to your question, SFR, there is a much smaller capital outlay depending on what you want to put up.
So about 3.5 times lower capital outlay, right, Jimmy?
Compared to the shares. But of course, you don't want to replicate the exposure to the shares. Also can. The minimum bought size for the warrants are about 100. So I would say because this warrant costs about 3.5 cents, right? So you really are just only paying $3.50 if you wanted to, the minimum, right? But I know there is a minimum comms, or maybe now Philip doesn't have, but certain brokers have got minimum comms, which means you wouldn't want to trade with only $3.50 because, the comms you pay is going to be more. Which takes us to our next question. Somebody asked what the trading fees are. I think, Jess, you also asked this question. What are the fees for the warrants? Now, the fees of the warrant is what is being charged by your brokerage. So depending on which brokerage you trade with, I know under Joey, under Philip right now, there is no minimum brokerage for warrants.
For different account types. So it depends on the account types, right? But essentially, you pay pretty much the same as, it's like a normal Singapore stock listed on the SGX, right? So depending on the same account type, there could be a prepaid account, it could be a contra kind of account, pretty much the same fees as your normal Singapore stocks, if I could add.
Yeah, but the fees are going to be much lower because the warrants cost less than the stocks, right? So the fees of trading or Yang Zijiang call warrants or Amova STI call warrant is going to be much lower than if you traded the underlyings directly. Yeah,
definitely. Yeah, because the contract value is much lower lah. Yeah. Okay, good. I
hope we have answered every question. I think we are just 5 minutes past time. But as always, thank you very much, Joey, for sharing the one good trade, exclusive for Macquarie Warrants.
Thank you.
I think Joey's obviously got many ideas out there, which is something he does, with his One Good Trend live shows. But for the purpose of our product, which is for short-term trading, we always tell him, just amongst all your shares, all the stocks that you're looking at, all the indices you're looking at, narrow it down to just that one good trade for our warrant investors to trade in the short term. So hopefully with today's show, Joey has provided not just one, but two ideas, which again, we will revisit and do a recap to see whether Joey's views got actualized and whether it's made you returns, whether via the underlying that you're trading directly or via the call warrant. So looking forward to the next show already. Hopefully that's going to happen sometime in August or early September.
Yeah. And I understand that you have a seminar coming up, right, Jamie?
Oh, yes, that's correct. Thank you for that. So if you wanted to find out more about warrants and today's show was not good enough for you, we have a follow-up seminar next week. We try to do this on the back of the One Good Trade Live show in case you're interested to find out more about warrants. Come and find out more at our office at Marina One. It's free of charge. We provide dinner. So come and, as you eat, come and find out more about warrants, how they work, the whole concept of time decay, or what the role of a market maker is, other tools to select warrants and estimate the warrant performance. All that will be covered in what we call advanced warrant seminar, but it's really not that advanced. It's just more advanced than what we've covered today, essentially. Nice. So looking forward to seeing some of you.
Yeah, the link is right in the chat, guys. To register for Jamie's, warrant seminar. The link's right in the chat, right? So do check it out. All right, you can attend. That's where you can ask questions personally with Jamie. Meal is provided as well. Right, awesome. Right. Okay, good. So I think that's it, guys. We've come to the end of today's One Good Trade live show. Yes, we try to do it every month, so we hope that you got value. You're a bit clearer on warrants. Not just on the two stocks, the ideas that I shared with you guys, but how you can potentially magnify your returns using warrants. All right. So with that, I think pretty much come to the end of today's live show. We'll see you guys maybe in the next One Good Trade live show again, together with Jamie again, to add more value to you guys, and we'll kind of do a quick recap of how the ideas have done. All right.
Thank you, everyone.
Okay. So take care. Thanks, everyone. Bye-bye. See you guys. Bye.